Did you know that in the world of stocks, there's a phenomenon that can send prices soaring, leaving traders stunned and investors excited? It's called a short squeeze. And right now, it's creating a buzz like never before. Meme stocks have recently taken the market by storm, capturing the attention of investors worldwide. These stocks, like AMC and Mullen, have become the center of a battle between retail investors and short sellers. But what exactly is a short squeeze, and how does it impact these stocks? In this video, we'll dive deep into the world of short squeezes and explore the potential for a squeeze in two intriguing stocks, AMC Entertainment Holdings and Mullen Automotive. So, make sure to get ready for an adrenaline-pumping comparison as we uncover the short squeeze potential between AMC and Mullen stocks. Let's quickly learn about one of the most massive short squeezes in history. GameStop was a video game retailer that was struggling financially and was heavily shorted by hedge funds and other institutional investors who thought it was doomed to fail. But then a YouTube video by Roaring Kitty and a Reddit forum called r/Wall Street Bets changed everything. They noticed that GameStop had more shares sold short than available in the market, which created an opportunity for a massive short squeeze if enough people bought and held the stock. They also liked GameStop as a company because they had nostalgic memories of buying games from their stores when they were kids. So they decided to buy GameStop shares en masse and hold them until they reached the moon or beyond. And boy, did they reach the moon or beyond. GameStop's share price went from $5 to $50 in August 2020, then from $20 to $480 in January 2021. That's an increase of 2,400% in just 5 months. Many Reddit investors made millions of dollars from this trade, while many hedge funds lost billions of dollars from this trade. It was one of the most epic battles in stock market history. AMC Entertainment Holdings has been making waves in the stock market as a meme stock, gaining popularity among retail investors. It has experienced significant volatility in recent times. And currently, AMC's stock price stands at $4.70. AMC stock has been subject to intense speculation and trading activity, making it highly volatile. It has seen its price fluctuate dramatically in a short period. This volatility can present both risks and opportunities for investors. One notable aspect of AMC is the high short interest, with short sellers holding 25.94% of the public float. These short sellers are betting that the stock price will decline, and their positions could potentially be squeezed if the stock experiences a significant upward price movement. Analysts have expressed mixed opinions about AMC stock. While some view it as a risky investment and advise caution, others see the potential for further gains. This divergence of opinions reflects the uncertainties and unique dynamics associated with meme stocks like AMC. The potential for more short squeezes looms over AMC. A short squeeze is when short sellers are forced to buy back the shares at higher prices to cover their losses, pushing the price even higher. Short selling is when you borrow and sell shares from a broker, hoping the price will go down. Then you can buy them back at a lower price and return them to the broker, keeping the difference as profit. Sounds easy, right? Well, not so fast. Short selling is also very risky because if the price goes up instead of down, you will lose money. And if the price goes up a lot, you will lose a lot of money. So why do people short sell stocks? Well, there are many reasons why people short sell stocks. Some do it for hedging purposes, to protect their portfolio from market downturns. Some do it for arbitrage opportunities, to exploit price differences between different markets or securities. Some do it for speculation purposes, to bet against a company or an industry that they think will fail or underperform. And some do it for malicious purposes, to manipulate the market or damage a company's reputation. Meanwhile, Mullen Automotive is an electric vehicle startup facing its own set of challenges. Mullen's closed its week with 81 cents, reflecting another decline. Short borrow fee rates for Mullen have seen a significant spike, indicating a crowded short trade. This means that many short sellers have exhausted available shares to sell, creating a supply-demand imbalance. Such a situation can potentially lead to a short squeeze if there is a sudden surge in buying pressure. Mullen's financial situation poses difficulties, with a high cash burn rate and limited revenue generation. The company has produced zero revenue in the last 3 months and burned through $67.5 million in operating cash. These financial challenges raise concerns about the company's sustainability and ability to fulfill its obligations. It's important to note that investing in Mullen carries significant risks, given its current circumstances and uncertainties surrounding its future prospects. The stock has experienced a decline, and the company's cash position is a cause for concern. However, the high short borrow fee rates and the potential for a short squeeze add an intriguing element to Mullen's story. If short sellers begin to cover their positions due to a rapid increase in the stock price, it could trigger a short squeeze. This would result in a significant upward movement in Mullen's stock price, creating an opportunity for investors. Both AMC Entertainment and Mullen Automotive share some similarities as potential candidates for a short squeeze. They both exhibit factors that could contribute to such a scenario. First, both stocks have high short interest, with short sellers holding a significant portion of the public float. In the case of AMC, short sellers hold 25.94% of the float, while Mullen has experienced a recent spike in short borrow fee rates, indicating a crowded short trade. The supply-demand dynamics play a crucial role in a potential short squeeze for both stocks. When short sellers exhaust available shares to sell, it creates a supply-demand imbalance. A sudden surge in buying pressure from retail investors or other market participants can lead to a rapid increase in the stock price. Retail investor engagement is another factor that could contribute to a short squeeze in both AMC and Mullen. These stocks have gained significant attention from retail investors, with active discussions and engagement on social media platforms. This heightened retail investor interest can result in swarm trading, where many retail investors collectively buy and hold the stock, putting upward pressure on the price. Meanwhile, institutional investors play a significant role in short squeezes and can impact the market dynamics. Their actions, such as adding to or covering short positions, can influence a stock's overall supply and demand. Institutional investors often have substantial resources and can take large positions in stocks. If they decide to enter or exit a particular trade, it can create significant movements in the stock price. Moreover, monitoring borrowing rates and short interest is crucial when assessing the potential for a short squeeze. Borrowing rates indicate the cost of borrowing a stock to short sell, and a dramatic increase in these rates can be a sign of a potential short squeeze. Short interest, on the other hand, represents the total number of shares that have been sold short but not yet covered. High short interest means many investors are betting against the stock, which can contribute to a potential short squeeze if buying pressure increases. Investors can gain insights into market sentiment and the potential for a short squeeze to occur by keeping an eye on borrowing rates and short interest. These indicators can provide valuable information when making investment decisions and managing risk. But before we continue, we want to thank you for watching this far. Reiterating the potential for a short squeeze in both AMC and Mullen stocks, there are several factors at play. In the case of AMC, it has gained significant attention as a meme stock and has a large following among retail investors. The stock has experienced high short interest, with short sellers holding 25.94% of the public float. This imbalance between supply and demand can create conditions for a short squeeze if buying pressure increases. Mullen has also attracted interest from traders. Short borrow fee rates for Mullen have spiked, indicating a crowded short trade and potential supply-demand imbalance. If short sellers rush to cover their positions, it can lead to a surge in the stock price, triggering a short squeeze. Both stocks have experienced volatility and fluctuating prices in recent periods. Retail investor engagement, swarm trading, and social media discussions surrounding these stocks further contribute to the potential for a short squeeze. Retail investors are willing to support these stocks, which could lead to increased buying pressure and a squeeze on short sellers. However, it's important to note that short squeezes are not guaranteed and are influenced by various factors. Market conditions can change rapidly, and investors should exercise caution and conduct their own research before making any investment decisions. So, will you be closely monitoring AMC and Mullen stocks for possible investment opportunities in light of the potential short squeeze scenarios? Let us know in the comments section below. And while you're at it, make sure to smash the like and subscribe buttons down below. Now, if you want to know more about Mullen and its recent performance in the EV industry, then make sure to click and watch this video right here and enjoy. And that's the end of this video, guys. This is Nate, and see you next time.